Hey everybody, it's Pete. Good morning. Welcome to a new episode of today's Best Stock Picks. It is Friday morning, August 13th, 2021. We're going to focus on Penn National Gaming today, and it's kind of an advanced trading strategy, an advanced tape reading lesson. But first, we're going to start out with a good problem that we have right now in sector rotation and following the money, which is the fact that financial stocks have been very strong, especially if you've been in the right financial stocks. But what's kind of exciting here is the sectors that we've been tracking, and this is a really big lesson to understand. Most people make the mistake and only track the current day or the day that just finished, and then they jump into those stocks the next day. But what you see here is exactly what we specialize in, which is order flow and order flow over time. The biggest thing that I want to get across to you right out of the gate today is that there's a lot of traders right now complaining that this is all that's available because they're just trading that one day. When you track the order flow, and the biggest thing about the order flow is paying attention to how much real money was committed to an idea by somebody with deep pockets. It doesn't matter who it was. It could be a hedge fund. It could be a bank. It doesn't make a difference. It's somebody with a lot of capital, a lot of research, and then putting real money to work over one day, over 1 week, over 1 month, and then they leave clues. These are the footprints that we're watching, and we're going to walk through a couple of ideas right now in the financial industry and the industrials specifically, taking us into the best ideas that I'm looking to put in my game plan today, as well as why some ideas look awesome, but they're not new swing trades today. So stick around. I'll be back in just 1 second. Okay, as with everything we discuss every day, this is for educational purposes. It's up to you to make your last and final decision on what you do. So we're going to start out right away with the financial stocks. We're going to actually jump right into, you know what, let's actually start out with Penn. Let's talk about that story first because it's a pretty interesting setup. This is from Seeking Alpha coming out today, undervalued stock poised to win the sports betting industry. That's a great headline. And they make a great discounted cash flow valuation of what the stock should be and et cetera, et cetera, et cetera. That's great, right? The way that we do things is we try and get ahead of the headlines. And when we're looking at individual stocks, and you can see how hard we've been working this chart for a while now, which, by the way, this is exactly how to work the charts. What you're looking for are clues. What price matters? What price did somebody make a stand? What price did somebody allocate real money? And earnings came out and barely took out the support level and rocketed higher. That's not enough, though. What is enough versus enough to make a commitment? What ended up happening here is now we're starting to get follow through. So we got 1 day reversal. Actually, here's where it started. 1 day reversal a week prior to the earnings where it broke down and rallied. Broke down and rallied. Price is giving us clues. Price is telling us where to focus our attention. Now, this longer term trend that we've had from here, if you know anything about the way that we analyze trades, you're looking for obvious order flow. You're looking for situations where you can say, my gosh, buyers are 100% in charge of that stock, and I just can't wait to find a spot to piggyback onto their buying pressure. However, that is not what we're looking at right now, which is really the point of everything I want to get across here. Penn has become an interesting idea. It's become something that we could build a case for. However, because the most recent price action is still bearish, the order flow is still bearish, this is a situation where if you start to look to allocate shares here, it must be with lower position sizing until the order flow starts to become more obvious over time. So if we get back to the spreadsheet that we post for our members in our community every day, we're looking for time. We're not just looking for 1 day. Okay, 1 day somebody allocated capital. That's fantastic, right? So if we go back down to the daily chart, 1 day, that's great. 3 days, that's great. But 3 days got followed up with not yet, not yet, not yet. Okay, earnings come out. This decline is a lot less than this decline, and we came right back with 2 days of buying. Okay, this is a bullish U-turn. We traded into well bid, and now we're testing key levels here at around 74. So when we walk you through this every single day, I want to make sure that you have the context that first we're looking for ideas and then we're looking for trades. So now we'll take it a step further, walking through the Penn idea. Because this is the first signs of a potential reversal, if I allocate shares to this. It will be a smaller position of my intended position because we don't have enough proof yet. We don't have enough feedback. We have one day, hopefully forming a week and then a month. As we start to see smart money, deep pockets allocating more and more shares, and this is another clue, in volume, we want to start to see today's breakout. If today gets over 74, we want to see a giant candle to say, okay, we call that fuel. It's an energy candlestick. It's breaking out. Somebody's stepping up and spending money. Those are the clues that we're looking for. Okay, so that's the trade idea, the trade scenario that we're looking for in Penn right now. Now, if we work our way over to the market, just the resiliency of this market is just incredible. Absolutely, positively incredible. The only downside to what we're looking at right now is this. The volume is so far below the average as we're hitting new all-time highs. It's basically putrid. There's really no other way to put it. There's no hedging going on because you would still see increased volume here. There's no new buying going on here because there's no new volume here. And you can see this is the 30-day average, and it's just neutral at best. But here's the question, and this is a question that we get all the time. Should you be looking or fearful of the fact that the market is kind of melting higher and everybody's predicting this big giant crash? The answer is absolutely not. You should still be looking to be aggressively long until we see clues telling us differently. Now, what are those clues? Well, we just gave them to you in Penn, except for the fact that they're on the opposite side. We'd be looking for selling days where the market is rolling over, going sideways, and then another selling day, going sideways, and then another selling day. But we're not seeing that. So as of right now, I personally am confidently still looking for places to buy. Now, does that mean that I'm just getting long, set it and forget it? Heck no. I am still managing my position size based on how stocks are trading. So we're going to take a look at what we talked about here with the financial stocks. And yes, financial stocks are strong. Yes, we've been trading them aggressively, mostly Morgan Stanley over the last couple of weeks. But let's take a look at Morgan Stanley. Okay. What does Morgan Stanley normally do? Again, this is all-time high, so this is just amazing. What does Morgan Stanley normally do in a bullish run, and how much dollar amount does it normally move? Take out of the fact that it's 1, 2, 3, 4, 5, 6, 7 days in a row now of buying, decreasing volume yesterday as it pushed new highs. So less buyers were involved in yesterday's new highs. It's saturating to the point where the idea is absolutely still good, but not somewhere I would put on a new swing trade. And Goldman Sachs actually showing a melted candle of a little bit of a indecision there at new highs. So I'll be day trading these stocks long. I won't be looking to put on new swing trades. But how do you take advantage of the fact that for the last month and the last 2 weeks, financials have been strong? Well, you go and try and find a financial stock that is not overextended, that is not at resistance. And the one that came up for today is MetLife. MetLife has now rallied. Bullish gap, 4 out of the last 5 days closed above the open, has some minor resistance here at 63 with potential to get up to 67 and beyond. So I want to make this clear. I'm looking for MetLife to be over 63, to come out of this pause from yesterday, and then take off and go through 67. That's the scenario. That's the thesis. This is a trade that still has meat left on the bone, that still has room to go in an industry that has been leading the way for the better part of the last month, being confirmed by the last 5 days. Yesterday was not awesome, and you saw that where even Goldman Sachs kind of pulled back. So there's a lot of stocks in that industry that we could be looking at that we've been talking about all week, but they're a little bit beyond the optimal entry, or they're actually at a resistance level on top of beyond the optimal entry, and now we're looking for another pause before we get another move like this. So I can't stress this enough. This is probably one of the biggest mistakes that smart traders make, is running scans the night before or the next day, looking at stocks that have been up the most and then looking to jump in those stocks simply because they were up the most without taking into consideration how far the stock has recently moved. So you could say I'm in financials, but are you in the right financials today? The last 5 to 7 days has been Morgan Stanley, Goldman Sachs, Discover Financial, another one. But as of right now, they're a little bit too far beyond the optimal entry. So MetLife will be one of the stocks that I'm going to be keeping an eye on today. Then if we continue to work through the list, I'm going to end up looking at industrial stocks, which are not textbook perfect, but as I said, there are certain situations where we want to be looking at stocks that have proven themselves. Now, remember, we just said before about Penn, from 1 week to the next. 1 week of buying, a pause, another week of buying, another week of buying. So we're starting to see certain industrial stocks now waking up and giving us reason to start paying attention again. So we'll look at Caterpillar. Okay, Caterpillar had 2, 3, 4 good days of buying, finally cleared this resistance level. Yesterday traded into a bearish U-turn. So now we're looking for the next entry. Why? Because we see there's room to go. That profit potential is the reason we accept risk in the first place. So when we combine profit potential with not buying too late, you start to have the correct risk reward on a trade. So this has already traveled what it normally does. Caterpillar looking for this to pause at this level and then give us a new entry to the long side. Same thing with UNP. Hey, you can start to see the sector is not perfect yet, but it is absolutely positively waking up. Also, obviously, in the context of the infrastructure bill, where we're going to start to see these longer-term downtrends finally breaking. So this is how you put the clues together for which stocks you're trading today versus which stocks should go into a tracking journal that maybe you might trade a little bit further into the future. Just a quick idea that I want to make sure I mention, the stock that we've been watching. If you weren't watching Triple D over the last 3 days when it actually rallied after earnings here, this stock was up 40% in 1 day and now has cooled its jets dramatically, but now it's paused for a couple of days. You can see it's actually set to open lower again. I am looking to be a buyer of Triple D today. It's a question of, do I get the price action that I want to put it back into my list? And right now it looks like that needs to be somewhere over 33.50 to 34, looking for it to make another run back up to the $40 level. This was a vicious move to the upside. And we actually got something similar in Snap last week, that 2 weeks ago on earnings, the stock, as we said, expected, just normal price action. After this monster move, the stock had to consolidate. I'm looking at Snap over 78. Now, you might say, well, if you like it over 78, why don't you just get involved now? And the answer is clear. Why would I want to get involved if that's the right price? It's having a hard time between 74 and 78 right now. I don't have enough profit potential to justify accepting the risk. So I'm looking at Triple D over 34. I'm looking at Snap over 78. If and when they hit those levels, I take them out of my tracking journal, put them into my game plan, and then those become stocks that I'll be looking at that day. One other one that is, I'll give full credit to members of our community that have been watching it over the last few weeks, is BT, and had a really nice bullish U-turn yesterday, a lower price stock, up a little bit higher today, something that would be more, for me personally, a little bit more of an active day trading stock. So I want to thank you so much for being with me here today. Hopefully these ideas gave you some new things to consider today. If you enjoy this kind of stuff, absolutely please positively subscribe to the channel, hit that alert button, smash the like button so you let me know what kind of videos I'm producing that are giving you value. So have an awesome, awesome day. Have a profitable day trading and have an awesome weekend.